Hello gang, Manja here at FXLINK. Thank you for joining me on this week's trade review video. In this week's video, we're gonna have a talk on the most important concept that many traders need to grasp in order to thrive in the markets. And this talk will be on patience. Now before that, let me take you to the charts to see what can we learn from the trades that we posted on our Sunday's market preparation video and review them, and then we'll talk about patience towards the end of the video. So grab your pen, paper. I'll see you when I see you. Now, let's get to the Euro Aussie pair. Initially, my kill zone on the Euro Aussie pair began from this resistant level back to this support level right here. Okay, I expected price to get into this kill zone, give us a bottom out, then a retest of structure of that support level, then a higher close in order for me to have a valid setup for me to enter. Okay, so if you notice, price began to come at our kill zone, gave us a halt over right here, but on our other side we didn't get oversold, so that meant that we had to wait for a little while longer and look for an oversold state somewhere in this zone. Initially, I had two zones I was looking at actually. First, this zone, okay, for potential buying opportunity. This zone was my potential buying opportunity, but some of my filters wasn't met. So another interesting zone that I was looking at throughout the week was this level right here, this support level. And as it is clear, you would notice that price blew through this support level, and then price didn't support, then give us a retest, then higher close in order for us to enter next bar market. Okay, so my filters didn't get met, so on this trade I was forced to stay on the sidelines and be patient. Okay, so what am I expecting on this pair? What am I expecting? Well, since prices blew through these levels of support, which where my potential buying opportunity was at, I'm currently looking at these support levels right here where we held. Okay, you will see we spent quite a while, almost a week, consolidating between these two levels, and this resistance level is broken. So this support level, if price holds here, give me a bottom out, okay, retest, then higher close with a bullish divergence in this case, then I'll be having a potential long opportunity with targets looking something like this previous support level right here, and stops below this rectangle right here. So you would notice that ever since price opened right here, we had to wait through all of this junk, all of this consolidation, and finally we had price coming to our kill zone. But still, yet again, we had to wait for our setup to be met in order for us to enter a high probability trade instead of just entering into the market. All right, let's get to USD yen pair. On the yen pair, this is a pretty nice nice trade, by the way. He had a nice setup meeting us. We have bullish divergence, as you have watched the video, a 786 retracement with exactly a entry level right here. So if you have entered on this level, stops would have been lower than this low, and first targets would have gone right here. So your trade would have looked something like this, and targets of 80 pips, first targets of 80 pips, all right, stops of 38 pips right here. Okay, then second targets would have been a 618 retracement from that level to those levels. So your second targets would have came right here. So let's play this out. So throughout the week, what happened, as soon as the market opened, it gapped down, came to our entry levels. Then after coming to our entry levels, zoop, okay, price pain free did something like this, zoop, came to our first target. After coming to our first target, this was a decision level where you would have chosen to either take half of your profits and break even, okay, either hold in order for you to have this potential reward right here, okay, or either close out on the first target and then just leave it be. If you chose to hold, then you would have gone to many psychological battles in the mind that many traders, actually all traders, are going through consistently in the market. Now, this is what happened. As soon as the market hit our target levels, price began to roll over on a dime right here. Let's just get back here, zoom in, okay. So as price came back, many traders go through emotional battles saying, I should have closed, now the market is gonna take my money. No. And what tends to happen is that many traders, as price comes back here, they enter into a renegotiation state where they talk to themselves and say, actually they try to talk to the market, which is absurd, but in their own minds they try to talk to the market and say, and renegotiate the terms of, please go back to where you were, which is the level that my first targets were at, and I'll take those those targets gladly and get out of the trade. All right, now that's when patience is beginning to be tested for many traders in similar situations like this, right? Price then price bottomed out, okay, then after having a double bottom, this is what happened. Price went up and hit our initial targets. This trader on his mind, now this trader says, okay, now that price came to my initial target, my first targets, I'm gonna get out. I don't want to go through the pain. I don't want to go through all this, okay? I don't want to go through this emotional roller coaster again and again and again and again and again, because I don't know how to react when these type of situations occur. I mainly, most of the times, get out on break even or try to renegotiate with the market. So I don't want to go through that again. This is what this trader says. And then what tends to happen most of the times is the market. What happened with the market? This happened. Zoop! Price hit our second targets, and traders say, oh, if I would have held this trade longer, I would have had this much money and I would have made more money than I initially did, right? This is messing you up, because what tends to happen is you fall prey to action bias. Okay? And recently I have read an article talking about this bias, right? And how to master the art of patience in the market. Now let's go to the article and let's talk about patience a little bit, because I think this is a very crucial topic that I have had a lot of time struggling with as a trader, and I feel like this could add value to more traders out there. So let's go to this article. This article is from seekingalpha.com, talking about action bias, why it's important to master the art of patience. Right? Now let's get here to this part. He says, imagine you're a goalkeeper, okay, facing a penalty kick, and as a striker hits the ball, is it best to dive left, right, or stay in the center? Now, in the research that the analyst James Montier conducted, he said goalkeepers have been found to dive one way or the other a massive 94% of the time. Yet the optimal strategy is to remain unmoved in the middle of the goal. Wow. Okay, so why do goalkeepers tend to dive one way or the other? The answer is that faced with the likelihood of conceding a goal, their instinct is to be seen to be doing something to stop it. This is what he says. So why do goalkeepers tend to dive one way or the other? If the ball flies into the top left or the right corner, they'd surely be berated for remaining unmoved. But if they dive the wrong way, well, at least their intentions were good. This is called action bias. Now, in practice, the immediate result of a bad dose of action bias is overtrading, the desire for a sense of control, whether it's caused by boredom, overconfidence, chasing new ideas, or even blind panic. Just like the example that we had on USD yen, right? Or the example that we had on Euro Aussie. Now, this particular response causing the action bias, it leads to unnecessary trading. Research back in 2000 by the behavioral finance professor by Brad Barber and Terence Odian found that individual investors pay a tremendous performance penalty for active trading. Their analysis of accounts at a large American discount stockbroker between 1991 and 1996, which is a period of 5 years, those people who are trading the most in the market, who are actively engaged in the market, earned an 11.4% annual return, while the market returned 17.9%. Right? So is it good to be actively engaged in the market? Well, let's just go to the greatest. I like to refer back to people that have been inspiring me throughout my journey in Forex and in trading generally. Jesse Livermore. And I recommend his book, The Reminiscence of a Stock Operator. In his book, he once said very powerful words that inspire me, and I just wrote it and plug it down on my wall, because these words are so powerful you cannot imagine. These words say, It was never my thinking that has made me money. It was my sitting. Patience. A true test of whether you have what it takes to become a good trader or not. Well, thinking back, I think our brain is hardwired to be thinking that when we are on the sidelines of any particular engagement or sport, mainly sport, those of you who played sport, I'm sure you can relate. Whenever you were on the bench, you usually thought that it's a bad thing not to be engaged, and you usually felt that urge to be inside the pitch and playing to and helping your team succeed in any other way. Okay, and me too. I used to play soccer when I was young, and whenever I was on the bench, I usually thought that I was missing out on an experience that's really fulfilling and rewarding in life. I usually felt that urge of trying to be engaged in the field. As Jesse Livermore says, it was never my thinking that has made me money. It was my sitting. I would like to let you think about those words for a minute. Now, this man says it was his sitting that has made him money more than his thinking, more than his trading ideas. Now, this is very, very complex and simple at the same time. Why do I say that? Because he is talking about the main lesson many traders understand but don't put into practice, which is patience. Now, this guy, he learned to fight off the action bias. He learned to sit and wait for his opportunity to arise. If it doesn't, and he would stand and sit on the sidelines until his trades are met. Right? Patience is a virtue that every trader has to have in order to thrive in the market. The art of waiting for your trade to be met, the art of managing your trades without any bias, and the art of sitting yourself down and letting the market do what it's supposed to do, and understanding that you cannot control the market. The market will do what it wants to do when it wants to do. All you have to do is put yourself in the right side of the market in order for you to be maximizing your profits and minimizing your risk. So I hope you enjoyed this talk today. If you liked it, press that like button, subscribe below to get more of this content, and share with many other people as you can. So from me, Mandla, I will see you on the next trade. Have a great weekend.